Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is August the 5th, 2025, and I want to talk corn. In particular, the corn futures chart. This is a continuous chart. It is a monthly chart. Each candlestick represents a month in duration. So, interestingly enough here, I want to show you what we're looking at. So this purple line is the 200-month moving average. Now, you often hear that technical analysis doesn't work. I'm not going to get any arguments trying to defend it anymore. I don't really care what people think or what their opinion of it is. I think technical analysis, when done effectively and properly, can be an extremely valuable tool, and I think the results do dictate that themselves. So, you know what, say what you want about technical analysis and moving averages, but the 200-month moving average did act as some level of support here, and then previous support often becomes resistance, which we saw back here, well, at the start of the calendar year throughout the winter months. Now we're trying to make new monthly lows. Back in July, we had a new monthly closing low at 381. I found support there. That was the closing monthly low. We dipped below that in August, all the way down to 360.50, and now we're at 381.50 right now is what we're trading at as we speak. And there's a lot of supply at this level. This 381 level is very important. I would argue between 4 and probably down to, well, 315 probably, so quite a wide range of interest supply at that level. And you know, we often hear that the previous highs will be the new lows. We'll see if that actually happens, because that theory is being tested right now. If you consider this band from 440 down to, well, $4 is the previous highs. Well, we're at 381 right now, and we're certainly testing that resolve. So we'll see where we are. The monthly candlestick matters more than the intermonth ones do, but you know, time will tell. So let's dirty this map or this chart up a little bit here, and I'm going to show you a few things that I've been looking at. If you're new to the channel, this stuff will be new to you as well. But I have these Fibonacci levels on here, and yeah, I call this the golden zone between the 61.8 and the 65%. You can see the August low actually found buying right at that 65% fib level, and we saw a nice rally up to here, up to that 200-month moving average and the 50% fib level, and then the sell-off continued. This line down here gets me really interested. It's what I have a head and shoulders measured move down there. What I did is I identified a head and shoulders pattern. This goes back a few years now, probably 2023. It's left shoulder, head, and right shoulder. Once we broke that neckline, I did a measured move down to $3 a bushel. I can also make a strong argument case for 275. I have another level down here at 245. It must be a fib level. I can't remember what took me down there, but that 245 level's been on there for quite a while. So keep note of that. And but yeah, I don't think we can dismiss the move down to $3 corn. And if that happens, then I guess we have to make some plans for that possibility. So I think right now is a great time to start taking some risk management in your whether using the cash sales or the futures and options play. If you do futures and options, again, I can't stress this enough, where your initial stop goes is more important than the price that you enter in at. Let me repeat that. The initial stop is more important than the price you enter at. That's how people who are successful trading, they pick a stop. There's various strategies to picking those stops, but they limit how much they're willing to lose, and they manage their account accordingly. That is why the best traders in the world are correct in their win-loss records between 50 and 60%. But why they're successful and the best traders in the world, they keep their losses small because they pick a stop and they stick with it. And I encourage everybody to do the same. Let's look at the weekly chart. Weekly charts, there's more wiggles and squiggles on there. It wants to come down, test this previous low at 361, it looks like. Really curious to see how it reacts to this 384 level, this fib level. But the trend is down, and we need to respect the trend. So again, if you do make some stops or you make some cash sales, have a level in mind where you're getting out when you're wrong, and or to replace your cash sales with paper if that's the case. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.